Welcome back, everyone, to another explainer. Today we are jumping straight into the absolute perfect storm that slammed the crypto markets on June 3, 2026. Things are moving incredibly fast. The market action is intense, and honestly, we've got a lot to unpack. So let's just dive right in.
Here's the roadmap for today. First, we'll hit that massive $1.8 billion market wipeout. Then, the dual shocks from MicroStrategy and Mt. Gox. Third, we're looking at the macro and geopolitical headwinds. After that, we'll break down the Binance liquidity squeeze, check out some wild decoupling in altcoins and alpha assets, and finally, wrap up with the upcoming June crypto events you need to know about.
All right, Section 1, the $1.8 billion market wipeout.
So $1.8 billion. Just let that sink in for a second. That is the total amount of leveraged positions completely wiped off the map in a mere 24 hours. We are officially looking at the largest single wipeout of 2026 so far, and it was driven right from the top, with Bitcoin plunging down to a 2-month low, well below that critical $67,000 mark.
Now, when you look at the breakdown of that $1.8 billion, a staggering $1.6 billion of it were long positions. Guys, this is your textbook long squeeze. Over-leveraged buyers who were absolutely certain the rally would keep going, they just got flattened when the market turned. To put the sheer scale of this into perspective, there was one single trader on the HTX exchange who got hit with a brutal $59.67 million liquidation in one single order. Ouch.
Which leads us to the real question here. How on earth did market sentiment plummet down to an extreme fear index of 11 so insanely fast? Well, to figure that out, we have to look at the dominoes that started falling both inside and outside the crypto space.
That brings us to Section 2, MicroStrategy and Mt. Gox.
What we've got here is a really nasty combo, a psychological blow paired with a very real physical threat of supply. Let's start with a psychological hit. For the very first time in 4 whole years, MicroStrategy actually broke Michael Saylor's famous never sell rule. They sold a portion of their Bitcoin holdings. Now, sure, the volume was relatively small, but the shockwave? Absolutely massive. People were spooked. And then you have the physical threat creeping in. Mt. Gox just moved over 10,400 Bitcoin, that's roughly $739 million, out of cold wallets and onto exchanges like Bitstamp. That is a massive flashing signal for impending creditor sell pressure.
Moving on to Section 3, macro and geopolitical headwinds.
Because, of course, crypto doesn't exist in a vacuum, right? We've got massive external pressures compounding those crypto-native fears. It's a total convergence of global risk. First, escalating U.S. Iran conflicts in the Middle East, with reports of disabled oil tankers and missile strikes, have severely damaged global risk appetite. Then on the economic front, U.S. inflation is proving incredibly sticky. April core PCE jumped 3.8%. That effectively pushed the 30-year Treasury yield above the 5% mark, making safer, traditional assets way more attractive to capital. The result of all this? 10 straight days of Bitcoin spot ETF outflows, pulling nearly $3 billion right out of the market. Institutional money is hitting the brakes.
Next up, Section 4, the Binance liquidity squeeze.
Check out this structural shift happening on Binance. Over just a 5-week period, Bitcoin reserves on the exchange actually surged by 5.1%. So more supply is moving onto the exchange, which, usually means people are getting ready to sell. But at the exact same time, stablecoin liquidity, the USDT and USDC you actually need to buy that crypto, shrank by an unbelievable $3.87 billion.
Let's clearly define what this divergence actually means. A liquidity squeeze is a structural shift where the supply of an asset increases on an exchange, but the immediate capital, the stablecoins available to buy it, drastically shrinks. Basically, supply goes way up, but the immediate buying power completely evaporates. And when that happens, prices get structurally suppressed. It's exactly why Bitcoin lost its grip on that $67,000 support level and slid down.
All right. Let's look at Section 5, altcoins and alpha assets.
Because despite the total bloodbath in the broader market, we are seeing some wild decoupling happening right now. Obviously, the majors took a serious hit. Ethereum, Solana, and BNB saw massive double-digit drops, anywhere from 7 to 10% in just 24 hours. But look at the alpha sector. Certain assets are literally ignoring the crash. TON jumped 15% just on the news of rebranding back to Gram. And Marvel, ticker MRVL, it surged over 40%.
Now, why on earth did Marvel decouple so hard while everything else burned? It all comes down to some massive AI sector endorsements.
It's just a fantastic reminder that powerful narratives, especially around AI infrastructure, can totally thrive and create these isolated pockets of extreme bullishness, even when the rest of the market is aggressively deleveraging.
Finally, we arrive at Section 6, upcoming June crypto events.
Let's look forward and figure out where the smartest minds in the space are gathering next, because June is packed. Right now, June 2nd and 3rd, Proof of Talk is happening in Paris, heavily focused on Web3 and AI. Next week, June 8th through the 10th, the Ethereum ecosystem takes over New York for ETHConf. And right after that, June 11th through 13th, BTC Prague kicks off in the Czech Republic as Europe's largest Bitcoin-only event. These are the rooms where institutional and technical leaders are going to be strategizing their next moves to navigate this chaos.
And hey, while everyone has been obsessing over price action and liquidations, the regulatory foundation is still quietly being built in the background. The U.S. Senate is returning to advanced negotiations on the Clarity Act right now. Lawmakers in Washington are officially targeting August 2026 for a comprehensive crypto legislation package to finally define clear regulatory boundaries and stablecoin frameworks. The infrastructure is being put in place, completely ignoring today's spot price. Which brings us to a final, provocative thought for you to chew on. With a massive $1.8 billion leverage reset now officially behind us, the excess market froth is gone, washed out. So, is this extreme fear we're seeing the absolute end of the rally, or is it actually the exact clean slate this market desperately needed for the next big leg up? The overleveraged longs are out, and spot buyers are definitely starting to eye the floor. Thanks so much for joining me today and diving into this explainer. I hope organizing this absolute chaos brought you some clarity. Stay focused, stay curious, and I'll catch you in the next one.